Time now to return to the big discussion on market sense. One of the big things we're tracking very closely today are the surging crude oil prices, which is not good news for the Indian economy, the fisc at large. India is, of course, a net importer of crude, and it's also election season. So a trend that we spotted about 2 weeks ago is the oil marketing companies are refraining from passing on the entire burden to the consumers. So while it's good news for the consumers, it's a thumbs down from Dalal Street, which obviously tracks the bottom line and margins of the oil marketing companies very closely. On top of that, you've also got a crucial OPEC meet coming up, which along with Russia is looking to keep the output cuts in place to ensure that prices only keep going up. So let's take this conversation forward with Vikas Halan, the Vice President of Corporate Finance at Moody's Investors. We're also being joined by Sushil Choksi of Indus Equity Advisors. Good afternoon, gentlemen. Thank you so much for coming to joining us here on ET Now. I'll come to you first, Vikas, for the big picture. You're seeing the surge in crude oil prices. There had been prices that had come down in the last 2 days since and had not gone up the way everyone had imagined since this strikes in Syria. But you've got a crucial OPEC meet. It's still looking to collaborate with Russia to make sure that the prices keep going up. The question also is that could U.S. retaliate in this era of trade wars in a deteriorating environment of relations between India and Russia to increase the shale output to ensure that whatever it is OPEC does, it's negated?
Yeah, hi, good to be here. So I think the ball is not entirely in U.S.'s court in this case because any action to escalate the tension would actually play in the hands of OPEC. So, for example, if you put any sanctions further on Russian crude, you will take that supply out, and that would mean that the prices will go even higher. So I don't think that is going to work from a U.S. perspective. But U.S. shale production can definitely take advantage of higher oil prices. However, with a lag. Typically, what we have seen is if oil prices are rising in Q1, the full price impact on supply actually happens in Q3, so about 6 months from the time the oil prices go up. So we expect that to continue. The lag cannot get shorter. So our view is the second half of the year, we would see the supplies coming up. And let's not forget, there is going to be a demand impact of rising oil prices as well. There will be some substitution, so there would be some softening of demand growth. So when you combine both of these, we continue to expect that oil prices cannot be sustained at such a high level unless tomorrow OPEC decides to cut production even more, which is not the base case.
Okay, let's go across to Sushil Choksi for a stock impact. Hi, Sushil, it's Nantara. You got Brent futures now inching towards $74 to a barrel. Yes, this may be good news for ONGC, Oil India. Terrible news for IOC, HPCL, and BPCL. In fact, ONGC also now has to worry about the fact about being the parent company of HPCL. In the first television interview, the ONGC chairman did say that it's no longer a party for ONGC. You guys involved in the stock markets are very upset that the oil marketing companies are refraining from passing on the entire burden to the consumers. What's your outlook when this entire oil and gas pack is concerned?
Good afternoon, and thanks for having me on the show. I personally take this correction and maybe a little further correction based on what Brent crude and what happens between OPEC and Russia bloc as a on the supply side, whether they're able to. So the mid-May, when the meeting takes place, you will get a true picture of where the pack stands. And you need to keep an outlook on shale gas, what's happening, because the drilling is likely to expand. But the bigger worry which I have is the double whammy which we have with the rising crude and oil, rupee price. Rupee against the dollar weakening will have a double impact on the import side for the crude refinery. So I'll observe both before I take a call, but I'm quite okay because the stocks have corrected in percentage terms reasonably. If you see another further healthy correction from here between 3 to 5%, I would assume that there would be some bargain hunting. We all of us know that elections in this year and the second half specifically post-May are plenty in nature. So there would be some refrain in terms of price hikes, but Minister at the same time is on record that they are not intervening. So keeping a balance between election, Minister's outlook and the company's requirements, keeping the rupee and the oil price both intact. The margins for the company are in the vicinity of 3 rupees to 3.25 where diesel and petrol are concerned. So diesel is around 3.25, petrol is around 3 rupees odd. And refining margin at Singapore level is around 6.25, 6.5. Keeping a balance between both with all the uncertainties led by oil and rupee, there is definitely a dampening in the prices of oil marketing companies, and it may further deteriorate because of fear in the marketplace with the conditions prevailing in the market. So I think uncertainties may throw opportunity, but maybe a little further away.
Point taken. Yes, as you pointed out, Sushil, it's going to be a double whammy, especially with the impact of the currency as well. But Vikas, hi there. Good afternoon. Just wanted to get in your perspective as to now what the road ahead is when it comes to crude oil prices. Do you think that it would perhaps remain elevated only in the short term, and once we garner clear signs on improvement in fundamentals, particularly from cues from the meeting from the oil producers on Friday, that would bring about a little more clarity as to where crude oil is headed?
Yeah, look, the demand and supply factors continue to remain in flux for crude oil. On the demand side, what we are observing is the demand elasticity for crude oil to price change is now at its highest. Because a lot of countries globally have deregulated the selling price of the fuels in the respective countries following the oil price decline. Short of rollback of those reforms, we continue to think that there would be a response on the demand side as the crude oil prices, increase. On the supply side, of course, with the U.S. shale now responding without any collaboration or cartel, the supply side also remains in flux. And let's not forget there are geopolitical tensions right now that are escalated. There is also a crisis in Venezuela, which is curtailing production there. So these are things that are sort of tilting the balance one way or another. So it's very difficult to say what's going to happen in the next 6 months, how these geopolitical tensions would evolve, whether this is a short-term thing or whether this is going to escalate further. So these will determine where the oil prices will ultimately move. But from a fundamental demand and supply perspective, we think the long-term oil prices are not going to be very high, especially when you incorporate the effect of decarbonization that a lot of countries have signed up to. There would be reduction in the oil demand globally over a longer term, and the supply is certainly been going up. So long-term oil price outlook continues to remain very, very sanguine, and the near term is sort of dominated by these event risks and geopolitical tensions.
Okay. Sushil, in light of, some of the factors that Vikas as well brought up with the geopolitical tensions as well, and where crude oil could potentially be headed, what's the sense that you're getting when it comes to the earnings for some of these companies? And from a stock price perspective, do you think that results will have quite a bit of an impact because most of the OMCs center around the potential capping of fuel prices in election year as well? So the likes of IOC, BPCL, etc. will be impacted on the back of this?
Just before I get on to that answer, just keep in mind that global growth at 3.5 or 3.6 or 3.7 is supporting where oil consumption is concerned, and a good global growth is always where consumption of oil will happen. Taking that further, the oil imports parity and market. So right now, the last quarter would have an inventory gains in majority of these companies. In the quarter which is currently under operation, we need to see how they manage post Karnataka election, where the pricing regime is concerned and where oil stands at that time. So in the interim, the sentiment may be negative, but reporting quarter, which will happen only in May, we'll have to see the factors at that time. But the price is already reflecting a weak performance anticipated for the first quarter of FY18. led by the crude and the structure.
Right. Sushil, I just wanted to understand about the oil marketing companies. At a certain level, there would be value in these companies. At a certain level, crude also will start to slip sometime in the future. When is that level? When do you advise people to go ahead and buy these names?
Hello?
Right. Sushil, when do you advise people to go ahead and buy oil marketing companies?
One is we need to look at the oil companies. At the same time, put it.
Okay, I think, Sushil, we are unable to listen to that answer, maybe because of some network issue. But thanks so much for taking out time for us. Always good to get perspective from you. Let's go across to Vikas. He's still with us. Vikas, just a final question. In terms of, oil marketing companies or oil consumption companies, what is the sort of impact that you see? You see most of them being passed on, whether it's an oil marketing company or any company which is using oil as an input?
The Indian oil marketing companies, we have seen from the prices that so far they are not absorbing any of the oil price increase. So they're basically passing on all the oil price increases in terms of petrol or diesel or LPG. And the interesting bit is what happens to the prices when the oil price goes even further, whether government rolls back some of the reforms or the government actually reduces some of the taxes in order to, as you said, during an election year, whether to keep the prices in control, whether they reduce the excise duty. So that will be the thing to watch out for, and that will determine the impact on these oil marketing companies.
Right, Vikas, thank you so much for taking our time for us. We earlier spoke to Sushil as well, but we thanked him earlier because his line was not that great.